Home Depot, you can see there Tuesday, and Target, Walmart, Lowe's, all the major retailers, many set to report results next week. Joining us now on what investors should expect, Manny Chirico, LNK partner and BCI brand chairman. He's also the CEO of PVH. Manny, I guess given the last quarter to the third quarter, when you're so conservative in your guidance based on maybe problems that people were forecasting because of tariffs, most of them beat those lowered expectations. So I don't know, what do we expect the outlook to be for this next quarter?
I think there's two things. I think coming out, just what you said, Joe, I think the third quarter, retailers will make their numbers or exceed their numbers overall. Coming out, inventories are clean. That's the good news. I think the challenge retailers are going to face is, given the higher costs that they're dealing with, the strategy that they have in place is lower promotions than last year, trying to manage their gross margin. And I think given a relatively compressed holiday season, Thanksgiving is on the 27th, it's one day more than last year, but still in a relatively compressed, with all the uncertainty that's out there, my personal opinion is it's going to be a more challenging holiday season going forward. I don't, most estimates are in that plus 4% sales range. I'm more in the range of 0 to 2%. And I think the result of that will be the need to really get more promotional in the holiday season, given the short selling season, and will put pressure on earnings going forward on a general basis.
Yeah, it's hard to be promotional when you're already trying to maintain margins for a variety of reasons. There's a few tailwinds, I guess, gas prices, things like that, Manny, right? In high-end consumers.
Joe, it's not all doom. It's not all doom and gloom.
Tell me.
The government shutdown didn't help only because it's only 1 to 2% of the workforce. But relatively speaking, it just created more anxiety in the market. Now there's a real question about interest rates going forward. And I think the consumer's hearing all this noise, and it just puts more pressure on them as they go forward. And I think the categories that are going to be really pressed are going to be the discretionary items, apparel, accessories, electronics, because I don't think there's anything that's really coming out that's all that new and exciting. So I think those areas are going to see more pressure, and I think potentially more promotions than are being planned.
It's interesting because you, just like the consumer, you pick out some winners and some losers, but your winners are not the ones necessarily that benefit from the high-end consumer. They're companies that can help the low-end consumer, I guess, find value. I mean, you like Costco and Walmart and TJX.
Yeah, I think those, absolutely, Joe. But I think it's more a trade down. I think what you want to try to avoid as a retailer is being the guy in the middle. I think if you have a strong value message, I think you'll attract, in this environment, more and more consumers. So I do think TJX, Costco, and Walmart will continue to perform. I think on the other end of the spectrum, clearly I think luxury will be fine. But, I'm talking about more strong brands, more in a niche kind of market, somebody like a Dick's Sporting Goods or an Abercrombie and Fitch that is strong brands, a more affluent consumer, and the execution for the last couple of years has been off the charts good. So I see those as continuing to perform as we go forward.
So department stores, no. And we used to say Target and Walmart. We don't anymore. So Target, you're not enthralled with at this point either, and just department stores.
Yeah, look, I think department stores are going to be in a tough environment. I think, unfortunately, I think Macy's has been actually outperforming and executing well, but I think it's still going to be caught in the middle. I think Kohl's will have a difficult time. And I think, look, I think sooner or later Target is going to figure it out. That's too good a management team. But I don't feel they're in a position for this fourth quarter to really turn around the ship as much as they'd like.
Everybody's talking about affordability. Manny, what do you attribute that to? Is it housing? Mostly, was it the inflation spurt that we saw a couple of years ago? And prices prices never go down. The inflation is permanent, and then it just goes up from there. But is it that it's on everyone's lips? And I mean,
Yeah,
people are feeling it too, though. People, it's not just talking about it.
I think that's right, Joe. And I think look, there's two places they see it every day. It's in gas prices, which actually is a positive as people look at that relative to where it's historically been. But if you go into a supermarket, or even a Walmart, everything is significantly more expensive. And we could talk about that we've somewhat bent the cost pressure curve from a high point of 9%, but we're still dealing with inflation on top of that that's in that probably close to 3%, and tariffs are just not helping the situation. And I really think the tariff situation gets worse next year because the retailers have eaten a lot of it, especially on discretionary items like apparel and footwear, and they've pushed it back on the factories. But once we get into 26, there's no place to go because every country is basically at a minimum has a 15% tariff rate or something as high as 25%, where I think India or China are going to be. So that pressure from where goods are sourced is just going to continue, and I think work its way into the inflation story.